If everyone can take their seats, we can get started since we have a quorum. Mr. Angel can't be here for the workshop, so I'll go ahead and call this to order and we can get started.
I think she's got it ready, Mandy. Lisa had done some of it.
Yes, the supplemental and the,
Well, where's the supplemental?
this one's the CAFR.
And if you want to flip back and forth between the two of them, you can go here back and forth. And then, so do you want the supplemental
Yep,
first?
the supplemental.
Right, and then they said it was, how I go for Control. There we go. Okay.
All right, there we go.
Thank you.
You ready?
Okay, whenever you're ready.
Okay, thank you, Dawn. What we're going to do today is go over the supplemental information regarding the audit for the year ending June 30th of 2015. We had a previous meeting with the superintendent, with Billy. Dawn was present and had an exit conference relative to this. And today we want to present it as a public record to the school board members. And of course, we'll try and answer some questions that you may have. Rather than trying to look at the 225 or 230 page report, which you probably have, which is called the CAFR, we have extracted certain items which we've done in the past, which is a supplemental handout that you should have. It's in a blue binder, spiral bound, and I'm going to hit some of the high spots of this, and mainly a lot of this is regarding the general fund. So that being said, let's just turn to page 24, and we'll talk a little bit about some of the findings that we had. We had 3 findings this year. On page 24. And these come right out of what's in your comprehensive annual financial report, which was submitted to the Legislative Auditor's Office. The first finding that we have is an internal control finding. You can see that this finding has been present since 2006. And it says policies and procedures regarding the proper accounting and safeguarding of assets in the school activity funds are not being enforced. The policies and procedures regarding collection of monies for various fundraisers and activities at the individual schools should be adhered to and closely monitored by the school board. Of course, you have the corrective action plan, and the superintendent and Mr. Guidry, of course, and y'all staff really getting into this and are doing more and more audits to try and make sure that everything is being done in accordance with the policies that have been set by this board. We're hoping that maybe this finding can be eliminated this year. It may not be for another year before we can get everything in order, before you can get everything in order, that we can eliminate the finding. It has been there. We've seen some improvements. It's just not where it needs to be. So we didn't find any missing funds per se, but just the policies that are there, the record keeping needs to be enhanced. Billy, I don't know if you want to add anything to this.
Is that the clerical for the?
Yes, the 2 main areas are fundraisers, and we have anywhere from 1,500 to 2,000 a year. There's a very large number of them, where there are certain records that have to be maintained, and it gets to be pretty detailed. And the second one area, it's class fees, and we're working on those 2 areas to see what we can do to streamline it a bit, and maybe even get the number of fundraisers down in count, so that if there are fewer fundraisers, there's less of a paper trail that's warranted. The positive thing is, back in 2006, there are about 7 areas that we get tested in, and we had issues in just about all 7 of those areas. For example, cash receipts, cash disbursements, so on and so forth. So the positive of this finding is that we have it narrowed to 2 now, but it is a rather large task given the volume that we have in those 2 areas. So we're going to be working on focusing our efforts on those 2 specific areas. We don't feel that we'll have them addressed in the 15-16 year because we're basically just adding some of the things that we're planning on doing going forward. But we're hoping for the 16-17 school year we'll have it addressed.
One additional comment that I'd like to make is generally with the high schools, the 4 big high schools of the district, we have more problems. Of course, there's more monies that are funneled through those, and they go through those and have to be accounted for. And the superintendent and I have talked a little bit about it, and I think there's some thought process, and of course, Dr. Aguilar, please add to what I'm about to say, but there's some thought process about possibly maybe hiring 2 people to assist because of the volume of transactions with an accounting background. And these 2 people we could split half time at 2 of the schools, okay? Half time at each. And so you'd need 2 people could handle the 4 bigger high schools, would help assist with the 4 bigger high schools because that's where the bulk of the dollars are. We do have some issues, as Billy indicated, with some of the middle schools, and there's a few issues with some of the elementaries. But the problem is that there's not that much transactions going through those, so it's not that big of an issue. But with the high schools, there's an enormous number or an amount of transactions and for them to account for. And you may want to add to that, Dr. Aguilar.
Absolutely. We met with the Principals Advisory Council this week, and the high school principals have specifically asked for some help to offset these findings that happen annually. So in spite of the challenges with the budget, we're going to likely come to you with a recommendation for some additional clerical help for some of these larger schools to have us offset this finding in moving forward.
Okay. Sorry.
I had one comment on this issue. So it seems that if we did not have, and before you react, let me finish what I'm going to say. If we did not have fundraisers and or these small accounts, if I remember right, we total about $4 million. Is that right, Mr. Guidry? For all of our revenue that's generated from all of our schools through these types of events every year?
I believe it's closer to like about 12 million.
Oh, 12 million.
Yeah.
Okay, pretty significant. All right. So as an entity of LPSS, if we didn't manage these fundraising events as an entity, then it would no longer be a finding, and we would know. Then we wouldn't be required to hire, say, 2 accountants to make sure that we're compliant. There would still be a need for $12 million in accountability because we still need the $12 million and we still are going to raise the money. But what if we found an outside entity that was willing to be the steward of those funds? For instance, and I haven't spoken to them, but just I know that there are models out there. For instance, the Community Foundation. Maybe the Community Foundation can set up, and we've talked about an educational foundation specifically for LPSS, but what if we set up a fundraising foundation that had sub-accounts for each school? And even if there needs to be further sub-accounts, there could be. For instance, Lafayette High could have a sub-account under this one LPSS foundation at the Education Foundation. And then even under that sub-account, there could be one for football or the band and whatnot. And they charge a fee that's negotiable, but the monies would not be, we wouldn't be the steward of the money. And we would no longer have this finding. And then the foundation, if we could discuss it with them, may be more willing to help us in that. We could still have the fundraisers, but the money would go to CFA instead of coming through some sort of school account.
I think the nature of the fundraisers, and I'll just give you a couple of examples. When you're talking about, say, a raffle, where there has to be an accounting for the pre-numbered tickets, or a pull boy sale, it's not your typical contributions or donations that the Community Foundation of Acadiana handles. And even if they were to handle it, the issues that exist with the record keeping. And so the tickets, reconciling the tickets would still be something that would have to be done, and it would have to be done by I would think our personnel, because of the sheer volume of fundraisers that we have. So even though the funds, it's not a matter of the funds not being deposited as much as when we go in and try to you sell 1,000 tickets at $5, you should have $5,000. And looking for the audit trail, and more times than not, that audit trail is not there. At least not a complete audit trail. It's in bits and pieces. So it's more the record keeping than the actual accounting for the funds, if that makes sense. So the nature of the fundraisers, I don't think would lend themselves to it, but we'd be happy to talk to them about it.
Oh, I think if we think out of the box, it might be worth talking to them. They're pretty creative.
One requirement along those lines, Eric, one requirement we have made this year is for every fundraiser, a separate account, general ledger account, has to be opened up for every single fundraiser. So if a high school typically has anywhere from 100 to 150 fundraisers, then it's 100 to 150 accounts. And so when that fundraiser is done, in theory, the amount that remains should be the profit. And that profit, we should be able to tie back to the number of tickets sold less any expenses incurred to put that fundraiser on. So we're hoping that will help us in that process. That's one of the things that we're doing differently. We have a couple of other things that we'll be implementing. We started implementing already, where we're actually going to pull the fundraiser reconciliation forms in as soon as the fundraiser is done, review it in here at the school board office, and if it's not done properly, go back and work with those sponsors who were responsible for it to get it corrected. So there are a couple of things in place, but I'm hoping that those separate accounts will help us do some help the reconciliation process some.
And going one step further, Billy, is that some of these fundraisers, by doing what you're suggesting, trying to capture this so we can see, are we making money with some of these? Because we may be just, or they may be just spinning their wheels, so to speak, and not making any money on the particular fundraisers that they're trying to. But this will narrow it down to, hey, we make money with this, we don't make money with that. That's the way I see it. That should be some enhancements there, and then we can focus on the ones that we do make money with.
And just a quick comment before we move on. I'd mentioned this when we met previously. I'm not in favor of creating new positions for this, and so I strongly encourage staff to come up with some alternatives. If you want to bring us some proposed new jobs or positions, do that, but maybe consider an alternative. It seems to me we have enough staff at the individual schools that there should be someone there, data analyst or somebody, who can absorb this task without us having to hire additional people. So just keep your collective minds open and maybe have some alternatives.
Okay, if there's no further comments on that particular item, let's go to the second comment that we made, which was the school board did not have proper controls regarding the collection and remittance of sales taxes, including interest and penalties, resulting in non-compliance with Louisiana Revised Statute 47:337. This is at your sales tax collection department. We did have some issues there. I think these have been corrected as we speak. Some of these were annexations, and it was being collected and remitted to the improper taxing body, so to speak, and we're still dealing with this. In fact, I think next week we do have a meeting with LCG regarding some of this. So this item should be corrected, or has been corrected as we speak. We're not saying that some items may not develop again, but I think most of the major issues have been corrected as of now. Billy, is that pretty much a correct statement? I think it has been resolved pretty much.
Yes, I think a big part of it is the finding crossed over 2 years. It was noted in 13-14,
right,
and we started addressing it in 14-15, and pretty much had addressed it, but it took us part of 14-15 to get it fixed, so it generated the finding again.
Right. Okay, and the last item, that was 2 internal control findings that we had. The last finding we had was a compliance issue, and this is something that started in 2013. The former superintendent authorized changes to the rate of pay for certain employees, which was not in accordance with the board-approved salary schedule. As we all know, I think all of this has been corrected in that regard, so now we're following the salary schedules as approved. So we had 3 findings this past year. Just to give you a frame of mind, we do have the prior year findings. There were 9 findings last year. So you brought it down from 9 to 3, which is great. And as we said, the one I just mentioned, the third one on compliance, that item is now gone, as we know. And we're hoping, well, as Billy indicated, number 2 as well. So we're only talking about one of these 3 that looks like may spill over into this current fiscal year. Okay, let's get into some of the numbers, if we would. Let's go to page 3, and we will look at the general fund schedule of revenues. Of course, this gives you a detailed listing of the revenues for the general fund. We're going to focus on this. Primarily, I'm not going to get too much into the special revenue funds, which are mainly federal funding, because those basically are monies that are coming in and going right back out for the particular purposes. But the general fund, you do have quite a bit of control over. Property taxes, as you can see, and in each one of these categories, we have the budget numbers, which is the final amended budget adopted by this board, and then the actual numbers, and then a variance from the budget. And of course, on the far right, we have the 2014 actuals. So the ad valorem taxes, I'm going to focus more on actual to actual because you're very close to budget. Actual ad valorem tax revenues last year in 14 was $62.5 million. This year there's $65.2 million. So we're up approximately $2.7 or $3 million for this particular line item, which is great. Sales taxes are also up from $74.3 million last year to $76.4 million for the current year. So again, a $2 million increase in sales taxes. As we know, sales taxes for this current fiscal year, however, are down, but that's just because of the economic situation. Interest on interest-bearing deposits, $623,000 last year, $706,000 for the current year. Rentals and leases and royalties, $329,000 last year in the general fund. This year, $616,000. Other, for tuition for summer school and driver's ed, we had $141,000 last year and $146,000 for the current year. And a miscellaneous, which is a catch-all, $1,084,000 last year and $840,000 for the current year. So total coming in from the parish sources, $138,977,000 last year, as opposed to $143,900 for the current year. So we're up about $5 million in parish revenues or local revenues here in this school system for last year. State sources, however, those went down. The public school equalization, the MFP, $113.6 million last year, $110.9 million for the current year. As you can see, we're down about $3 million. And at $110 million, we're going to look at this in just a minute. Matter of fact, we can quickly look at the next page on page 4. If you would, just quickly look at page 4. Under regular programs, you have allocations to charter schools. $9,439,000 for 2015 versus $742,000 for last year. And that $110 million of revenues includes this $9 million. So you record the revenues coming in, and then we record the amounts that were shifted over to the charter school, $9.5 million. So our revenues are down, but plus we had to take $9 million out of that $110 million and give it to the charter schools. Revenue sharing was $2,075,000 coming from the state. This year it's $2,090,000, so it's pretty much the same. The PIPS is minimal at $37,000. Non-public textbooks, $209,000 versus $216,000 of revenues. And other went from $2.4 million last year, which we had a special allocation last year coming from the state. This year it's $35,000, so that is down about $2.4 million. Total revenues from state sources, as you can see, went from 118 million down to 113 million. So we're down $5 million. And as I just pointed out, of that 110 million or 113 million in total, 9 million had to be shifted over to the charter schools. Under federal sources, pretty much the same, 58,000 in the general fund last year, 51,000 for the current year. So total general fund revenues, they're basically flat. 257.4 million last year. They went down to 257.2 million for the current year. We're down $200,000 in net revenue. So we're up 5 million in parish. We're down 5 million from the state. Any questions on these numbers? Okay, beginning on page 4, we have the details of the expenditures, and then I'm going to summarize everything for the general fund. I'm not going to read every line item. What I'd like to do is let's just hit the subtotals, and we can make certain analogies or certain comments within those categories. Total regular programs last year was $92.5 million. This year, $101.9 million. And as I just pointed out, look at the first line above the total, or the subtotal, was $742,000 allocation to charter schools last year. It's $9.4 million for the current year. So we're up by basically $9 million, and it's because of that allocation which had to be made to the charter schools.
Can I ask a question, please?
I'm sorry?
I want to ask a question. I noticed that the cost of substitutes, we were over budget by about $750,000. Do we have any idea on what the cause of that is? Or why we under budgeted? Or
Your budget was substantially less than the prior year, Justin, as you can see, because last year we spent $1.9 million on that line item, and the substitute teacher's budget that was amended to was $1.4 million, but you spent close to what you spent last year of $2 million. I can't speak to that. Maybe Mr. Guidry or Mr. Dugas can.
Yeah, the 1.4 is a standard budgeted amount. It's a roll forward budget, and it just wasn't adjusted upward to reflect the fact that actual expenditures were higher. And of course, substitutes are not something that we have a great deal of control over. We can encourage attendance, but we can't mandate it. So it's one of those things where we budget a targeted amount, and we'll end up having to adjust it. And in this particular case, overall we weren't that far off for regular programs. We're only $256,000 difference between budget to actual, but for that specific line item, we should have had a budget revision to address that difference.
well, I guess the question is, are we going to, for this coming year, for 16-17, are we going to use 1.9 or 2.0, $2 million for our budget?
We would.
That'll be the question, right? Because if 1.4 was a roll forward, I understand you may not have had the 1.9 whenever we budgeted the 1.4, but are we going to take this new information into account when we roll forward the budget this year?
Yes.
All right, thank you.
Okay, any further comments or questions on the details of the regular programs? If not, let's go to special education programs. And here, again, very close to budget, within $10,000 on $28.7 million. And you can see really a decrease of about $1 million from the prior year. Went from $29.8 million last year down to $28.7 million for the current year. Of course, it's mainly salaries and benefits, as you can see. No questions. Let's go to page 5 on the vocational educational programs. Again, less than what we spent last year. We spent $4.5 million last year. We spent $4.3 million for the current year, and your budget amount was $4.3 million. So we're right on target here. On other instructional programs, you can see you spent $8.7 million, $8,772,000 last year, spent $8,144,000 for the current year, and in this category, we are off from the budget by $335,000. Again, that's not a significant amount when you figure that, you could be 5%, you have a 5% leeway. The bulk of it is in the teachers category. About $300,000 difference from the budget, but it is a reduction from the prior year at $5,071,000 versus $4,685,000.
I have a question on this.
Sure.
Mr. Guidry, it seems kind of a antiquated way to account for our educational programs by calling them vocational now. Now that we have, things are just different. We've been talking the last couple of meetings on the career and technical programs. So, I guess my question is there a reason why we budget the money specifically for this or allocate the money specifically for vocational educational programs? And should we expect a change in the language or a change in the funding amounts for those now that we're having more of a deliberate career and technical?
The asset titles are pretty consistent or are consistent with the state annual financial report that we're required to file each year. So these titles are pretty much in line with the titles included on our required state reporting.
Okay, so I guess then it goes to the question of, it seems that we have more of a primary focus on career and technical education, and that we're going to have more kids graduating, hopefully, in that. Are we going to see a shift in funds more towards the vocational education programs? I mean, I would expect it to be much more than the $4 million per year if we're really promoting it, and especially considering all the programs we're talking about for career and technical.
I would think the student population would be one of the main driving factors. So as that student population increases, the number of teachers will increase, and that'll drive that number up. If they're assuming that there's an increase in the student population that's on that path. Mr. Craig, you want to comment further?
The State Department is predicting that over the next couple of years, as Jumpstart expands, that anywhere from 40 to 50% of the kids might go through Jumpstart as opposed to the traditional college prep curriculum.
Right, and that's kind of what I'm getting at. It just seems like it needs to be, maybe we need to budget that way or start thinking more that way.
Okay. There's no further comments on the other instructional programs. As we said, you budgeted $7,000,008. We spent $8,144,000, and last year we spent $8,772,000. So we are down about $600,000 from the prior year, but we are in excess of what was budgeted by about $300,000 on this particular category. The next item is under special programs. And this includes mainly, I think, the English as a second language, which is the largest part of it, I believe. And last year you spent $8,505,000. This year we spent $9,053,000, but it's pretty much on target with your budget of $9,061,000. And again, mainly made up of salaries and benefits. Adult ed is a minor item here. $10,000 was spent last year, $9,966 for the current year. Down at the bottom of the page, the total pupil support services, which of course is your supervisors, your therapists, your counselors, nurses, so on. And we budgeted to spend $20,300,000. We spent $20,351,000, and last year was $20,842,000. So again, right on par with last year, slightly less than last year, and right on par with your budget. Next page is the instructional staff support services, and here we had budgeted to spend $10.5 million. We spent less than that at $10,166,000. Last year you spent $11,156,000. So we're down $1 million from the prior year in this particular category. On the general administration, and it begins on 7 and concludes on page 8. But while you're on 7, look at legal services, because there's two reasons why this item went up from the prior year. Legal services went up from $508,000 to $876,000, and at $876 is right on target with what you budgeted. And then under judgments, that's up about $250,000. Last year you spent $899,000. This year $1,142,000. So I just wanted to point that out while we were on 7, and then you can look at the totals on the next page, and you can see why the general administration is up over the prior year from $4,480,000 to $5,218,000, and it's primarily due to those two items that we just talked about. I don't know how much, but some of those legal fees were pertaining to the litigation that was involving the previous superintendent and so on. And I don't know how much of it was, but I know some of it was that. And Billy, you may know better than I as far as what the details were, but that's part of why it was increased. So I'm sure we don't anticipate that for this current year.
No, not as much, but we do still have some ongoing
We
litigation.
still have some, right?
Yeah.
I'm sorry? School administration, here you had budgeted right at 16 million. You spent less than that at 15,783,000. We're 215,000 below budget. And last year was 16.6 million. So again, about $1 million less than what you spent in the prior year. Under business services, begins on page 8. No big changes here. It's pretty consistent with the prior year, very close to budget. Concludes on page 9, and you can see you budgeted $3,038,000. We spent $2,954,000 at this line item, and last year was $3,006,000. So again, less than last year by approximately $60,000. Operations and maintenance of plant services. Again, very close to budget, extremely close to budget on $22 million. You spent $22.2 million, that's $63,000 below budget. Last year was $23.1 million. So again, right in line and with the budget and less than the prior year. On the student transportation, it begins on page 9 and it concludes on page 10. Again, a similar situation. You budgeted $18.6 million, you spent $18.5 million, and last year we spent $18.9 million. So we're down $400,000 from what we spent in the prior year. Most of these categories are the same, except, as you recall, for the regular programs. Central services, we spent $4,400,000 last year. We're down about 10% at $4,090,000 for the current year, and this is $300,000 below budget. Non-instructional, which is the food service, repairs, and maintenance, $15,000 last year, $19,000 for the current year. On page 11, we'll conclude the total expenditures for the general fund, and here you have community service operations, about $60,000. Facilities acquisition was minimal, $7,000 in the general fund. Last year was nothing. And the group insurance fund, we show it here, but as you can see, it balances off because it's reallocated to the other departments. And you spent, and we'll look at this in a moment, you spent $48 million on the group health insurance program this year versus $44.8 million for the previous year. But again, it's all reallocated back to the departments and to the numbers that we talked about. Total budgeted expenditures, $252.4 million. You spent $251.6 million. So we're $735,000 less than what you had anticipated, which is great. I mean, you say $750,000, but when you're talking about $250 million, it's well within tolerance of the 5%. And last year you spent $246.8 million. So again, I want to reemphasize that included in the 251, we spent $9 million more on the charter schools than we had spent in the prior year. So if you factor that in, really your expenditures went down from the prior year. If there's no questions on these details, what I'd like to do is to go back to page 2, which is the summary of the general fund that we just looked at. So we looked at the details of the revenues. We'll look at the details. We've looked at the details of the expenditures. What I'd like to do now is let's just look at the summary of the general fund and how did we do on a $250 million budget. As you can see, the total numbers there in the actual column, you have $257,252,000, which was brought in as revenues, as opposed to $257.4 million last year. Our expenditures we just looked at towards the bottom half of the page, total expenditures, we spent $251.6 million this current year, as opposed to $246.8 million last year. Our excess or deficiency, in this case it's an excess in both years. Last year our excess was $10.5 million at this line item. It is $5.5 million at this line item for the current year. and our other financing sources, which is you have some transfers that go out of the general fund, mainly to capital projects and debt service in total, and as a net transfer, and it's very close. It's about $3 million net transfers out last year, $3,020,000. This year is $3,262,000. Our excess for the current year, we on a $257 million revenue budget, we ended up with a surplus of $2.3 million. Last year, our surplus bottom line was $7.5 million on the same $250-some-odd million of revenues. And as you can see, the fund balance, we're going to look at that in more detail. Your reserves, your fund balance was $86 million at the end of June of 15, as opposed to $83.9 million for last year. So again, we're up $2.3 million, which is our surplus for the year. Any questions regarding the general fund up to this point? Okay, hearing none, let's quickly look at page 18, and this is going to be your group health fund. We broke it out so you can see what revenues we brought in and what expenditures and how you spent the monies. Of course, most of it is under claims payment, the claims payment category. What you charge for services, which is both the employee and the employer, being Lafayette Parish School System, you brought in $46.4 million of revenues or of premiums. Now, these premiums were adjusted and modified on July the 1st of 2015. So these numbers do not reflect that adjustment that was done at that time. In 14, it was $44.7 million. But you can see the total operating expenses, and it's made up of contractual services, premium payments of about $2.2 million, claims payment of $42 million versus $40 million last year, and other operating expenses. And this is one category you might want to look at it, and there's not a whole lot you can do about it, but it was $249,000 last year, and it's up to $1,144,000. I think there's about $800,000 of this is due to the Obamacare, and there's a fee that had to be paid based on the group self-insurance fund, which was a required amount, and I think it's about $800,000. But there's nothing we can do about it. We have to pay it, and it's a mandated expense. So our operating loss for the year went from $346,000 last year in this fund to $1,849,000 in this fund. Added to that is the interest we earned on the deposits and the investments of about $50,000, and our bottom line net loss was $1,700,000 for the current year, $1,796,000, really $1,800,000. Last year was $289,000. Our net position beginning the year, we were at $5.8 million. We ended the year with a surplus of $4 million. Now remember, this does not include the $10 million that has been set aside in the trust fund. It's not included in here. It's been set aside, and it's included in the trust. So that's out of this picture. So $4 million is still what your surplus is. I don't know how you're doing for this current fiscal year, Billy, since you did have some modifications to the premiums, but I'm sure you guys are tracking it, and maybe you could give them kind of an update as to where you stand, let's say at mid-year or whatever.
Yeah, we've seen where the claims have sort of leveled off some. It hadn't increased. The increase that we saw last year in prescription drugs, we're not seeing this year. So we are seeing a leveling off of the claims.
Good. Okay, any questions on the group health insurance fund? What I'd like to do next is to look at maybe the 4-year comparison we give you on a per pupil for each one. That's on page 12. If you look at page 12, we'll give you a 4-year comparison of how much revenues are coming in based on a per pupil basis for each one of the years since 2012, 13, 14, and of course 15, which is the final year that we're auditing. And you can see how these shake down, so to speak, here at Lafayette Parish School System. Then I'm going to give you some comparisons to 2 of the other school systems that are close in size. On the revenues, if you look at it, the total parish source revenues, we're bringing in $4,774 per pupil. That's about 56% of our general fund revenues. And last year it was $4,460, so we're up about $300 per pupil in the parish level. In 2013, it was $4,234 Again, we had an increase of about $200 from 13 to 14 and $300 from 14 to 15. Now, on state sources, look at those numbers. In 2012, going all the way back, we were bringing in $3,930 per pupil. In 13, it went to $3,775. In 14, it's $3,798, and in 15, it's $3,758. Again, about 44% of our revenues are coming in from the state. And again, I want to emphasize, of that $110 million, it does include $9 million that we had to send out to the charter schools. Federal sources, of course, that's minimal here. About $2 per pupil. Total general fund revenues, $8,534 per pupil in 2015, as opposed to $8,260 last year. We're basing this on the pupil count, and it did go down from 31,171 in 14 down to 30,140 pupils in 15.
Burton, I have a question on that. So
Sure.
the 30,140 pupils, that does not count, or does that count the charter school students? That does not
Does
count
not.
the charter.
Does not. And I think in charter schools, Billy, what, 15 or 1,600 we estimate?
Yes, about 1,600.
So that does not include charter.
All right. I did have another question. I don't mean to go back, but when we were talking about the self-insurance fund, the $800,000 for the Affordable Care Act, where did that money go? Who do we cut the check to? Does that go to the federal government? Does that go to Santa Claus?
Actual check.
I think it's the feds.
Not sure the name of the organization, but we'll get it for you before the board meeting. If
Thank
that's
you.
okay.
I think it's one of the federal agencies, obviously.
Yes, but I can't
I don't
recall the
recall
name
which
right
one.
offhand.
Thank you.
Any additional questions, Eric?
I have one. So, so if the if the revenues include the money prior to allocating to the charter schools, why are the charter school students not included? I guess why is one in the numerator and not the other in the
because
divisor?
we were accounting for it in the numerator and in the revenues. We're also showing it as an expenditure, so it's going to show up as an expenditure, so we're backing it out there. Okay? So it's going to net out.
And
But the fact remains, I think we're sending a net of a total of about, 9,000 some odd dollars per pupil. But let's face the facts that if they were in our system, we have a lot of fixed costs that would not increase with these additional students, but we keep those revenues. So it does impact us.
no, and one other thing to keep in mind, that $9 million is the local share. The state share is deducted from the MFP revenue amount. So that's actually just the local share that gets transferred to charter schools. That's not the total.
The state share goes directly to them, correct? Yep. Any additional questions on the revenue side? If not, let's look at the expenditures, and you have the comparisons on a per pupil basis. You can see under instruction, we spent $5,053 on direct instruction. Last year was $4,627. Year before that was $4,541. The total direct student related, on that subcategory, we spent $2,888 on student-related services. We spent $2,910 per pupil last year and $2,700 in 2013. Total student expenditures, we spent right under $8,000 per pupil at $7,941 for this past fiscal year ending in June of 15. And in the prior year, we spent $400 less than that at $7,537. And the year before that was $7,283. Other support services, which is your general administration and your business services, we spent $409 for the current year versus $383 for the previous year and $364 the year before that. Bottom line, total expenditures, we spent at this system $8,350 per pupil this past year. We spent $7,920 the previous year and $7,647 in 2013. And of course, our bottom line net excess per pupil, we had an excess of $76 per pupil this past year versus $243 the year before and $227 the year before that. Any questions on the per pupil analysis? Okay, hearing none, why don't we go ahead and quickly look at page 13, the next page, and it'll give you the breakdown. We always like to show you this, as you know, most of your budget here in the general fund, and I know you've probably heard it before, but just to show you what the percentages are. On page 13, it tells you how much is salaries, how much is employee benefits. This is all salaries for the system. We spent salaries of $141 million and also $72 million on employee benefits. That's a total of 85% of every dollar in the general fund is going to salaries and benefits. It was 87 cents last year. It was 87.3 cents in 2013. You have the other fixed expenses, pretty much fixed on the other expenditures, and it represents about 15%. In 2015, it was about 12.95% in 2014, and it's been hovering around the 12% range for all their previous years. But if you look up above, we did show the appropriations to the charter schools so you could see it, and this year it was 3.75% of $9.4 million. Last year it was only $742,000, and it was 0.3%. So that's the reason for the increase in what we call other expenditures, so that we can highlight that for you and so you can see what it's costing. I don't know that we can do a whole lot about it under the current scenario, but it is what it is. Any questions here? Okay. On pages 14 and 15, we can quickly look at this so you can see what these comparisons are with Lafayette Parish school system versus Calcasieu Parish versus St. Tammany Parish. And again, I apologize that these numbers are very, very small, but in order to fit them on these pages, we have to present it this way. But I think you can get the gist of it. You can see that in Lafayette Parish, and I'm going to focus on 15, we brought in $5,697 per pupil. Calcasieu brought in $4,574 from parish sources, and St. Tammany's at $4,891. So again, Lafayette Parish is significantly higher than the other two comparable districts as far as what we bring in from the parish sources, being the property taxes and the sales taxes coming in. And this does include the 2%, or the 2002, I should say, sales tax fund. The state sources, we're getting $3,758 per pupil. Calcasieu's at $4,906, and St. Tammany's way above at $5,447. So St. Tammany's getting roughly about $1,700 more per pupil from the state under the equalization plan than what we're getting here in this district. Total general fund revenues, we brought in $9,457, which we talked about earlier. Calcasieu in total brought in $9,484, and St. Tammany's at $10,359. So this district is bringing in about 60% of our revenues in the general fund is coming from parish sources or local funds, and the other two districts are somewhere in the 48% range. So we're bringing in 12% more in the local than what they are, but we're taking a hit on the state sources.
I have a question on this. Dr. Aguilar, I'm fairly certain I asked this question a year ago, and I don't remember if we closed the loop on this, but when we look at this, the one thing that stands out to me is that what is St. Tammany Parish doing with their JROTC program to where they get nearly $500,000, and we're struggling to get our ROTC program funded? I don't know if we ever got that.
Lafayette Parish's ROTC program is not fully funded at this time because of the probation they were under. This is the last year of probation, and IT Young has applied for full reinstatement again.
But I understood that as maybe like half. Maybe we're at half funding now for one instructor instead of two?
No funding. It is all the staff at Como High School is from the general fund, and the Navy is not funding any of our personnel.
Well, this shows that we're getting the $51,130 from the federal source of revenue. So I understood that was IT Young's salary, but we had previously been paid for the commander's salary. But more importantly, unless St. Tammany Parish has 1,000 kids in their ROTC program, I'm just trying. It just seems like a whole order of magnitude off. And if we could maybe call them and
Yes, sir. I'll
they're
call
doing
them
and
tomorrow.
Find out what they're doing. And then also, how are we funding our Air Force JROTC program? Is that not federally funded at all?
Probably not getting enough.
Okay. Thank you.
Okay, down at the bottom of page 14, you do have some analogies regarding the ad valorem tax millage. You can see we're at 33.56 mils here, and Calcasieu's at 18, and St. Tammany is at about 50 mils. So we're quite a bit, we're between Calcasieu and St. Tammany. So their ad valorem millage is higher than ours, and I guess that's why they're getting a higher percentage in the MFP. Again, we have also a breakdown of the number of schools we have in this district, where elementary, middle, and high, and we have a total of 42 facilities. Calcasieu's got 59 facilities, and St. Tammany, as you can see, is at 55 facilities. There's no questions on page 14. Let's just quickly look at the expenditures, and you get a comparison of how this district is spending its funds versus how Calcasieu and St. Tammany are under these instructional categories and instruction or student-related categories. So under instruction, this district is spending $5,976 per pupil for instructional expenditures, and very close to Calcasieu at $5,872. St. Tammany's at $6,091. So as you can see, very, very close in all three of the different districts. Then on the direct student-related services, we're spending $2,888. Calcasieu spent $3,088, and St. Tammany spent a little bit more at $3,252. Again, Lafayette Parish is the lowest on the student-related services on some of the overhead expenses. So total student-related, we spent $8,864 per pupil. Calcasieu's at $8,960, and of course St. Tammany's at $9,343, and they have 38,000 pupils. Other support services, we spent $409, Calcasieu's at $400, and St. Tammany's at $488. Under the grand total of general fund expenditures, we spent $9,273. Calcasieu's at $9,360, and you can see St. Tammany's at $9,831. Our surplus before transfers was $184 per pupil. Calcasieu's at $124. St. Tammany's at $528. Dollars per pupil. Their surplus was like $20 million this past year per their published reports. Any questions or any comments here on these items? Hearing none, let's go back to page 1. And what I'd like to do now is let's look at a snapshot of your general fund. What revenue, what assets we had, what expenditures or liabilities we had, and what's your fund balances, because we always want to know what our reserves, what we ended up the year with in reserves. Looking at it, you can see the cash and interest-bearing deposits last year was $98.7 million, and in 15, at June 30th of 15, we were at $100,142,000. Investments, $23.2 million last year, $26.7 million for the current year. So between cash and investments, this year we're at $127 million. Last year you were at about $121 million. So we're up about $6 million in cash and interest-bearing deposits or investments. You have other items. Mainly the big category is going to be the other items is the due from other funds. The general fund will fund certain items, and then of course it's reimbursed by the special revenue funds. So that's why you have such a large number, but it's very comparable to the prior year of $14.4 million versus $14.8 million. Total assets of the general fund went up from $139 million to $144,892,000 for 2015. So we're up about $5 million in total assets. Now, the debts of the general fund, $55.5 million last year. We're at $58.6 million for the current year. And of course, the difference being your fund balance or your surplus. We mentioned it earlier. Your total surplus this year, fund balance, is at $86.2 million, and last year was at $83.9 million. So we were up. Basically, if you recall, we had about a $2.6 million surplus in the general fund. Of course, that's added into your fund balance or your accumulated surplus. Any questions here? Yes.
For Mr. Guidry, what's the 3-month mark on that for us for the fund balance?
The 3-month mark is 64.8 million. And when you look at, if you look at page 78 of the CAFR,
Or page 22 here, Billy.
oh, there you
Yeah,
also
I think
have
we
it.
have it in here. And let's look at 22, and I think we'll answer Timmy's question. On page 22, 64, as Mr. Guidry said, $64.8 million committed for economic stabilization. which is-
What I wanted to mention is you can't just take the 86 million and subtract the 64 and say that's excess. If you look at page 78 in the CAFR, it shows that there's some designations and commitments, so that the amount that we actually over the 3 months is the 12.4 million.
Right, that's on page 21, if everybody wants to look at it. On page 21, you'll see these numbers that Mr. Guidry's mentioning earlier. As he said, the unassigned is $12,400,000. The amount above the stabilization, some of that is somewhat assigned, or it's already been spent on prepaids or on inventory items, as indicated on page 21. Any additional questions here? If not, I'd like to point out one other thing. Let's see, it's on page 23. And it kind of gives you an idea of how this district compares with the fund balances that you have. And again, I'm not using the full 86 million as Billy indicated. Look at page 23 and you'll see what we're including here. What we're trying to see is how much would you have available for future expenditures should we have a catastrophe. And you can see Lafayette Parish, we have committed for economic stabilization, which is the 25% or 3 months. It's at 64.8 million this year. It was 63.9 million last year. Then we have unassigned fund balance of 12 million, which Mr. Guidry just alluded to, and last year we were at 10.7. So the general fund available fund balance is really $77.2 million. Looking at that, you can see Calcasieu is only at 45 million, 45.8 million. St. Tammany, however, is at 82.9 million. But we look at this and we compare it to what are we spending in the general fund for an annual operating expenditures. And in your case, Lafayette Parish, we spent $251.6 million, so that gives us an average monthly operating expenditure of about $21 million, $20.9 million to be precise. And last year in 2014, we were at $20.6 million. Calcasieu is spending an average of $25.2 million a month in 2015. St. Tammany is at $31.2 million. So when we look at this, we say how many months or how many days do we have available? This district went up from 3.6 months or 108 days. We're up to 3.7 months of available reserves, and that's 111 days. So we could operate for almost 4 months, three and a half months, or a little bit better than 3.5 months. Now look at Calcasieu. How do we compare to them? They're at 1.8 months, so they could operate less than 60 days on what they have as available uncommitted reserves. And St. Tammany is still below us at 2.7 months or 81 days. So overall, when you make this comparison or this analogy to some of the other districts, we're not doing bad at all in this district. Of course, the higher our number would be, the better off we would have and the more reserves we would have. But you are doing very well compared to some of the other districts. Okay. That pretty much concludes my presentation of the results from last year's audit. As we said, we only had 3 findings. We were down from 8 findings, to summarize it. And of those 3 findings, we're probably looking at, as we speak, probably only one of those that might have to be repeated for this current fiscal year that we're in. And overall, we had about a $2.5 million surplus for the year on $257 million of revenues. So again, not bad. And we compare very favorably to the other districts that are similar in size. As a matter of fact, we have more reserves than what they have. Any questions or comments?
I have 2 comments.
Sure.
First, Dr. Aguilar, when we look at page 15 and we have what I think is a simplified student-teacher or pupil-teacher ratio of 15.42 to 1, I think the series of questions we've been asking, the board's been asking you and Mr. Leininger, trying to get into the details of the pupil-teacher ratio, the approval of the pupil-teacher ratio, and I know we're getting into the weeds of the details of wanting to know everybody at every school in every classroom. But it's that discrepancy that we're faced with when we do the math, and here it is in a report. When we do the math, the oversimplification of pupil-teacher ratio we're showing is about 15 to 1. Yet the reality is it's actually, when we go to some classrooms, it's much higher. Now, we all understand that we have some classes that are required by law for maybe special education to have much fewer students per teacher. But so anyway, it's just that general observation. We're still trying to get to the nuts and bolts of the details because there may be some inefficiencies where we want to get closer to this 15 to 1 ratio overall. It's kind of an observation. That one was really glaring. The other thing, and it's kind of for the board, when we look at page 18 and we talk about our self-insurance fund, we lost money. As a business unit, we lost money. We took in a certain amount of money and we spent a certain amount of money. And we spent more than we took in. And it was about $1.8 million. And we had the decision as a board at one point earlier in the year to make a decision that likely would have saved us. I think it was $1.3 million. I might be a little off by that. As we move into the budget process and to the future, if we haven't, I think we need to exhaust the options, knowing that we lost money this year. We lost about $2 million this year in this business unit, if we look at it that. So we may want to make some of those choices again this year with regards to our self-insurance fund. That's all I had. Thank you.
Mr. Knezik, did you want me to respond to your first comment about
Sure.
getting in the weeds and pupil-teacher ratio?
Yes, sir.
So we have been giving you guys reports showing the number of students per section throughout the district, and they're very, very large reports, but we also have been aggregating the averages for actual number of students per section of class, and we'll be happy to share that information with you. For example, we're looking specifically at number of students in ELA classes, math classes, science, social studies, physical education, and other core subjects, looking at the actual number of students in those sections and looking at it for every grade, first grade through ninth grade. And I'm happy to tell you that the average number of students is fairly consistent in our schools. For example, and I'll just share with you mathematics. In first grade mathematics, the actual pupil-teacher ratio for the district is 20 to 1. We have 105 first grade sections of mathematics educating 2,124 students, a 20 to 1 ratio. In second grade mathematics, it's 20 to 1. In third grade, 20 to 1. In fourth grade, 21 to 1. Fifth grade, sixth grade, also 21 to 1. Seventh grade, 20 to 1. Eighth grade, 21 to 1. And ninth grade, 22 to 1. So our number of students in our classes as of the date of these data dumps is below the actual pupil-teacher ratio that the district adopts. So I want to reassure you that we're running anywhere from an average of 1 to 2 students below the actual pupil-teacher ratio on average in our core subjects.
And I know this is, I don't, while I'm at it, if that's the reality, then let's lower the ratio. If that's the reality, because when we vote as a board to raise the ratio for budgetary reasons, we, the board, hear from the public that we've added, the assumption is we've added students to classrooms just because we've approved the ratio. And it makes it very difficult to make those decisions.
Well, but keep in mind, we staff based on October 1 counts, and these numbers are coming to us from information from March of this school year. So there's probably a reason why they're down on average 1 or 2 students. I'm just calling to your attention the idea that we have large numbers of classes with, let's say, 15 students is really not the reality that we're seeing based on the averages across the district. And listen, we do need to understand and become more efficient. I agree. I have no argument against that. It's just that one of the things we want to do at the March 16 special board meeting is have a workshop before that special board meeting where we could have some of the instructional people talk to the board about staffing and master schedule building so that you can have a better understanding of how this works.
Thank you.
One other thing, Mr. Knezik, you had inquired as to the name of the organization that the check made payable to, and it's U.S. Treasury for the affordable health care.
So we're self-insured, right? We're self-insured.
Right.
All right. And we had to pay $800,000 to the federal government as a penalty.
It's a fee per eligible participant in our plan.
Thank you.
Mr. Knezik, I wanted to echo your comments regarding the group insurance fund. You're right on the money. You know, not only did we have a real good opportunity to potentially bridge that gap, but we subsequently had an opportunity to bridge, you know, a little less than half of the gap, about $700,000. And you know, we didn't take those opportunities. Hopefully with the new consultants we'll find a new happy medium here, but this is truly a negative situation, literally. So thank you for those comments. It makes a lot of sense.
Thank you.
All right, if there are no further comments, this workshop is adjourned.
Thank you. Appreciate it.